So good morning, everyone. My name is Jody King. I'm the Assistant Director with the Alaska Apex Accelerators. And this morning, on this rainy day here in Anchorage, Alaska, we're going to talk about how to manage contract closeouts. So just to do a quick audio check, could someone click the raise hand, make sure everyone can hear me clearly, can see the video? Thanks. Oh, thank you, thank you. I love it when I get those responses. Okay, go ahead and pull those down. So let's go ahead and get started. So we're going to kind of talk about these final steps of successful project completion and contract administration on managing contract closeouts. So here's what we're going to be talking about today, and it is a lot, and I'm going to apologize now that this presentation is fairly text heavy. The benefit of that is it gives you fabulous handouts to refer to later, but it is a little bit exhausting to look at for an hour and a half, but we have a lot to talk about. So here's what we're going to go over today. We're going to talk about contract closeout procedures. We're going to talk about completing the scope and that definition of physical completion. We're going to talk about closeout timelines, who should be involved, completion of contract files in final payment. We're going to talk about record retention requirements. We're going to discuss reviewing costs. Is this truly the final payment? And we're going to look at closing the books, that final subcontractor vendor invoices, lien releases, all of those, that making sure that you have truly completed and have a fully accountable final invoice before that contract is closed. And we're going to talk about rolling up past performance reporting and reviews. And this is more, this last section really is for the contractors more so than contracting officers, where just good practice when completing a project. So I did take a class from Management Concepts back in early 2023, and I am going to note now that I am pulling a lot of data directly from their slide deck. And again, it is a little wordy, but it does give you good records. The one thing about the Management Concepts class is it was really geared for contracting officers. So it talks a lot about what the contracting officer needs to do for a contract closeout, which I think is valuable to understand, because if the contracting officer is supposed to be doing this process to close out those government contracts, then where can we take that process and apply that to our own contract closeout internally from just a good contract management? And you'll see why as we go through, but the front end is just a little bit more geared toward contracting officers. But with that in mind, let's go ahead and move to the next slide. All right. So let's talk about closeout. So it is the wrap up. Let me see if I can change my get a pointer. So closeout is the wrap up of a completed contract involving the review of the contract file, the taking of necessary actions to close the file, and disposal of the file. It can begin when the contract has been physically completed. Although agencies specify their own administrative procedures for the closeout, FAR 4.804-5 requires that the administering office establish procedures to ensure that. So what they're stating here from this FAR example is, while each agency might add additional requirements, here's the baseline areas of things that we're going to do in this closeout or wrap up of a completed contract. So first item, disposition of classified material is completed. And especially if you have Department of Defense contracts, this is becoming more and more prominent under the CMMC, that there are those classified documents that have to be resolved at disposition. Final patent reports are cleared, final royalty payments are cleared, no unsettled value engineering change proposals exist. Plant clearance report is received, property clearance reports are received, all interim or disallowed costs are settled. And this one is a good one for all of you, have the making your notes, put a star here. Any price revisions are completed, also really critical for making sure we have those final invoices. Subcontracts are settled by the prime contractor. prior year indirect costs are settled, and this is for any sort of cost reimbursement type of contracts. The termination docket is completed if there was, again, this is specific to if there was a contract that was either terminated for convenience or terminated for default. The contract audit is completed, and this is really looking at the contract file and making sure that all the appropriate documents that involve all of this, so part of that audit is completed. For cost type contracts and some kind of fixed price contracts, we're also going to be looking at the audit. In that case, they're looking at the accounting audit if DCMA or DCAA, let me use the correct agency, is coming in to do the formal audit of your actual costs, actual overhead, actual G&A, so that they can verify for any cost reimbursement contracts. Contractor's closing statement has been completed, contractor's final invoice has been submitted, and contract fund review is completed with excess funds deobligated. So if any of you have contracts, especially with civilian agencies, and they're prompting you, hey, we got that delivery, where's your final payment? Where's your final payment? Because again, there's that timeline that they're trying to get that, and they need to deobligate those excess funds. If for short-term contracts, smaller deliveries, where it's kind of a one and done, shorter turnaround, time-wise speaking, within that fiscal year, if any excess funds are deobligated within that fiscal year, it allows the agency then to spend that. So that's really important for those activities, that's done while that money is still usable within that fiscal year. All right. So physical completion, closeout can only be performed on contracts that are physically complete. And here we have that FAR definition. A contract is deemed physically complete when you have a completion of all required deliveries and deliverables in the case of a service contract, or maybe it's just a final quarterly or monthly reporting packages. All supplies have been inspected and accepted. All services have been performed and accepted. All option provisions, if any, have expired, or if the government has given the contractor a notice of complete contract termination or the contract period has expired. So in this case, like this last bullet, think if you have some sort of MATOC, that multiple award task order contract, and you've hit your ceiling, whether the contract, maybe it was a 5-year contract, but if it had a 1.2 million ceiling and your task orders have hit that, then the government may notify you that they're going to terminate your contract because of completion for the requirements. And again, that's just one example. A contract file cannot be closed if, and here's that language, if it's in litigation or under appeal or in a termination process. And then all administrative actions to include required release and final payment are pending completion. So in litigation or under appeal, we might have a change order that's being disputed, or the final additional work was done and you're still having those discussions on payment of any change order activities. So if this is in process from any sort of legal impact, so cannot be closed. All right, so closeout timelines. So FAR, again, same 801-1, or 804, excuse me, FAR point 804-1 establishes the standard timelines for closing out a contract. These standards vary depending on the contract, generally as follow. So for simplified acquisition procedures, anything under FAR Part 13 are considered closed when the contracting officer receives evidence, receipt of property, final payment, otherwise specified in agency regulations. So basically here under simplified acquisition regulations, they purchased, let's say that pickup truck, it was delivered, it was accepted, it met all the salient characteristics as defined by the contract, and the contractor submitted the final invoice. Then under the SAP, that simplified acquisition procedures, the agency can now go ahead and start the closeout process. Fixed price contracts using other than simplified acquisition procedure should be closed within 6 months of receipt of evidence of physical completion. Now, even though they have evidence of physical completion, that's also including that final payment, but they're looking for that evidence. The cost reimbursement types, this is where it starts to get really complex. And if you all would, for those attending today, can you raise your hand if you guys have a cost reimbursement type of contract? Okay, so I don't see any hands raised, so it looks like most of you that are joining us today are kind of living in this world where you've had simplified acquisition. Most of your contracts might have been fixed price, lump sum contracts. Yep. Okay. And the reason I'm asking that, because I have quite a few slides that go into cost reimbursement, but for purposes of time, if that's not really applicable for you, then I won't spend a lot of time because this is where the contract closeout can become much more complex. So under cost reimbursement types of contracts that require settlement of indirect cost rates, again, they're looking at a 36 months after the month receipt of evidence, and then we're going to move here from that quick closeout procedures, which are very specific to cost reimbursement contracts. For all other contracts, they should be closed within 20 months of the month in which the contracting officer receives evidence of physical completion. So most of our contracts, we're kind of living in this world: simplified acquisition procedures, fixed price. Again, it's been physically complete. We can start that closeout process in reviewing the contract files, auditing that everything has been completed, and that the final payment has been submitted. All right. So accelerated closeout. Since we don't have anybody that's dealing with the contract cost reimbursement contracts, I'm just going to highlight this, and then you have the slides to really go over the detail. In essence, an accelerated closeout refers to, and again, this is those cost reimbursement contracts, any sort of cost plus fee, cost reimbursement, any sort of time and material where there is an actual overhead that's paid versus your proposed overhead. So often settlement of final overhead rates is the only action preventing a closeout of contract. The FAR 42.708 provides an accelerated method of closing out contract tasks. So they have what they call the quick closeout procedures. And it really is to address those final overhead rate calculations, because cost reimbursement contracts are just that. You are agreeing to have all of your costs under this best level, best effort level of completion, and your actual costs are going to be reimbursed. When you are proposing, you are kind of doing an estimation forward of what is this fiscal year going to bring for those actual costs. You're basing it on historical data, and you're rolling that into your proposed rate. So when you're looking at the closeout, then we look from proposed to actual. So again, can only be used on contracts, task orders, and delivery orders. Deviates from the normal procedure, which we're really going to go into detail a little later here. Other contract closeout requirements, the same. The file review includes clauses, any negotiated overhead rates, advance understanding, vouchers to determine uh, if possible, there was some types of labor claims are necessary, overtime documentation, proof of approval, previous available audit report to determine what adjustments are made. And then the contracting officer will determine if an audit of the contract books and records is needed. The advantages, get my slide advanced. One advantage of a quick closeout is that it permits contractors to invoice their indirect costs earlier, thus avoiding the administrative costs associated with tracking until final indirect rates are negotiated. So basically, it becomes a negotiated moment. There's a couple of different methodologies for determining those actual costs. If an accelerated closeout for reimbursed contracts has been excuse me, agreed to by both parties. And then there's a couple of different processes that they can use to determine that final amount. There's a decrement factor method or a percentage method based on. So I'm not going to spend a lot of time on this, since again, today's audience, we're not really dealing with any contract closeout. Just one last highlighted, the contracting officer should contract the contractor in writing regarding quick closeout procedures. And here's the list of things that this letter should include. So if you do have a cost reimbursement type of contract in the future, especially with a lot of changes in existing contracts kind of being modified and reviewed right now for the larger dollar contracts, then you may see this quick closeout addressing. Should get a letter, it should outline, and then there should be a method of process discussed how they're going to determine those final indirect rates. Again, the idea is to accelerate the closeout process so the contracting officer can get this contract closed faster, and the benefit to the contractor is to be able to receive that final payment sooner. All right, so let's talk about when we're beginning this contract process, who all should be involved. So regardless of the organization structure, the individual responsible for closing, oh, horrible typo, closing out the contract will be dealing with a variety of individuals performing the work and gathering data as needed. So this is kind of a comparison contract. So we have with the agency, all the folks involved from the agency side that should be involved in that final review. And then we look at that from the contractor as well. So from the agency, we're going to have the contracting officer involved. Maybe you have an administrative contracting officer, or in the case of termination, your file has been given to a termination contracting officer specialist. The auditor, the audit information for direct indirect cost rates under cost reimbursement, cost and pricing data, incentive contracts, etc. We have our property administrator, issues regarding title, disposition, and condition of contractor acquired government property and government furnished property utilized under the contract. We are going to have the information from the contracting officer's representative or technical representative or the project officer assigned as that contracting officer representative that was in, on the boots on the ground involved in that day-to-day completion of the said project. Legal counsel for any information regarding patents, copyrights, licenses, warranty, or other legal concerns. Financial fiscal, status of payments, availability of funds, authorization to make final payments, etc. And of course, the receiving agent, which oftentimes might be the COR technical officer, receiving reports and documentations have been complete. So this is from our agency side. For our contractor side, we can kind of see it kind of follows across. So we have our own in-house contract administrator, the business owner. You're going to look at that contract file, communication, compliance. Have these main things been addressed and captured? You might have a CFO or an accounting manager or your bookkeeper that is looking at your final costs versus proposed costs, including costs incurred from changes to the contract. So, and we're going to kind of talk about this a little bit when we get into our record. But if you've taken any webinars or any training on contract changes or managing contract changes, one of the very first things that is brought up is if you have a change in your contract is you kind of need a secondary accounting cost tracking mechanism to show the things that have been impacted from that change in contract. Well, part of that now then is going back and rolling at, from the contract closeout perspective, looking at your proposed costs versus your actual final costs and see how you did, both from what you had anticipated for contract performance, plus then the cost from any contract changes. This part I think is really critical because this is information that you're actually going to roll to your next proposal. How are you doing? Are you looking at actual and accurate labor costs? When you are estimating time, estimating freight, estimating these whatever components, subcontractor costs that are in that proposed, how is your final doing versus that proposed cost? So while the agency is doing that to make sure that they are paying that contract in full, yes, that is also something that the contractor should be doing as well, ensuring that that final payment truly is a final and complete payment for all work provided, all services provided, all supplies provided, etc. But this should also include that review of how did we do our proposed versus final. You might bring in an auditor or a financial specialist, outside CPA agent, do an internal audit if you want, especially if you are dealing with final rates for any sort of cost reimbursement contract. We have a property administrator, someone, and it may be, depending on the size of the company, your own contract administrator or the business owner, but someone should be tracking any government furnished property paid for under the contract performance. So are those then returned, whether items or materials, are those returned back to the government, or has the government then released that as they don't want those back and then releasing that ownership back to you? Some of the times with construction contracts, you might get where you have added, maybe I'm just going to throw this, bear with my numbers, maybe that 20% for contingency, where you had additional lumber that was part of your proposed cost, wasn't necessarily used for the completion of the construction contract, but now you have this spare materials, but the government paid for those. The government paid under that cost performance. It's different if you had extras on hand just in case, but if that was actually part of your proposed cost by completion, again, that's property that the government paid for by paying for that contract, and you have to resolve that disposal of that materials. Any security clearance administrator, for if you do have a contract that where your employees have security clearances are supposed to be for the duration of the contract, so that has to be addressed. Whether those security clearances are rolled to another contract so that the employee doesn't have to let go of those security clearances. But either way, from a contractual process, those have to either be returned or rolled to another responsibility for a contract. Your project managers should be involved because, again, this is the actual, they're kind of like that COR, COTR from the agency side, that they're going to be also reviewing any of their notes, making sure that all of these things are done and said, especially for contract changes in contract. Your cost estimator, again, looking at that proposed versus actual. Your marketing professional lead, for gathering past performance, gathering highlights, ensuring that while that contracting officer is closing out, that you have all of your required past performance. Again, depending on those dollar threshold, whether it goes into CPARs or if it's under those threshold that requires a formal contract evaluation, to request that to make sure that you have that for your past performance for your next contract. Legal counsel, again, looking at do you have any outstanding claims, requests for equitable adjustments, any requests from change orders that you've submitted, have all of those been resolved to your satisfaction? And of course, if you've had subcontractors or other teaming partners, have they been paid in full? Any change orders that might have been also involved your subs, have those been taken care of? And of course, part of that too is any lien releases in that construction realm. Okay, so quite a party. Just if you're going to you're going to sit down by yourself and close out that contract, check a box, be done. Really, here's the folks that really should be involved to make sure that that is complete. So let's move on. Let's talk about the contract files. So again, for 4.801 kind of requirement to establish files containing records, whether you have digital files or actual hard copy physical files. It is important that you have gathered all of that information together in one spot, clearly defined and accessible. So contract documentation is generally defined as written records of individual activities that have taken place under the contract. It ranges from letters, emails, and texts, invoices, records of telephone conversations, acceptance reports. The purpose is to constitute a complete history of the contract. In particular, file documentation must be sufficient to, one, provide complete background as a basis for informed decisions at each step in the acquisition process, support actions taken, provide information for reviews and investigations, and furnish essential facts in the event of litigation or congressional inquiries. So if you have a contract and it has warranty items, and maybe you have warranty items that also include subcontractor contributions to the completion of the contract, you really do want to make sure that you have that history so that should something come back a year from now and there's a warranty issue and you say, well, no, of course we didn't provide X, we provided Y, and here's the request, here's the reason, here's where we were directed, here's where that change order was triggered. Um, and again, just that protection of yourself from that long-term completion as those products or services are being implemented into that day-to-day agency activity. So these written documentation is incredibly important. I can't tell you how many times that I've had calls from contractors where they have an invoice, that final invoice for some reason just was never submitted in a timely manner. And here they are, anywhere from 2 years to 5 years later, and they're trying to get paid for additional work and they can't prove that they did additional work. They remember it, they know that they did it, but they can't substantiate the fact that they were requested and it was approved by appropriate governmental parties and that they are then due those additional funds. Tracking that, having those written records, those emails, those texts, and the criticality of documenting, face-to-face conversations, whether you follow up, hey, I just want to reiterate our conversation. You suggested that A, B, C, D happen. Here's what we responded with. Here's our timeline. Here's a possible contract price factor. We're going to bring the contracting officer in. You want to track those conversations. So much activity happens on that verbal letter, but it's very important for part of that contract success to have captured those conversations, some sort of written manner, and then making sure that that history then is filed in your contract documentation. Say that maybe you have a contract, you felt it went really well. All parties were satisfied. You went in, you got it done. The agency was happy. The contracting rep was happy. But you never got that past performance, and suddenly the contracting officer or the COR left, and now you have a new party involved that's trying to write up and close out that contract and close out that past performance, and they're just basing it on any comments that might be in their files. They weren't copied in on communication. That contract file didn't have those communication things that we were talking about. And so they're building a past performance based on what they see in their records. And it comes back as not what you think it should be. Maybe they highlighted a disputed moment or a delay or something that resolved peacefully, but again, there was nothing in that records. So they're going to write up based on what they see in their file, and you need to be able to dispute that. And the way to do that is by having this evidence, that written history, those texts, the communication, of having that information. So even this could happen a year or two after the completion of the contract, especially with such a high staff turnover in today's government employment world. You want to make sure that you have maintained those communications so you can provide that to whomever is being handed and taking over these activities. So it's not just from contract closeout, but just good contract uh, administration, especially in today's governmental realm. All right, sorry, I had a little soapbox moment. Had to get excited with the mouse, circle around with my laser pointer, but I can't express enough. Written records of individual activities, emails, texts, capturing that, make sure that you have a good capture process for your contracts. And then it makes the contract closeout easier because you've already gotten in the habit as part of your standard operating procedures to gather that. All right, so part of that, the written records should provide complete background as for basis form decisions that support any actions taken, provided, again, information for reviews and essential facts in the event of litigation or congressional inquiries. All right, so let me move the slide on. So contents of contract files. From an agency side, we pre-award to the contractor side. So from the agency, they're going to have their PR, their purchase requests, their acquisition planning strategies. For the contractor, it's going to be, are we going to go after this or not? And our decisions for that go, no go. Agency justification approvals, determination of findings. For the contractor, really, it's that copy of the solicitation and all amendments. For agency, evidence of availability of funds, set-aside discussion, government estimates, copy of the solicitation and all amendments, security requirements, evidence of required clearances, source selection documentation, and copy offer, quotation, or related abstract, pre-award survey reports, determination of contractor's responsibility, and then data related to fair and reasonable price. So this is all just leading up to the actual award. From the contractor side, we kind of started the go, no go, copy of the solicitation, all amendments. This can be really handy to have that for future reiterations, cycle through of this same work next contract cycle, but also too, just looking back if there's changes, what triggered those changes with their misunderstanding from the solicitation documentation. It's good to have those documents. Your proposal working papers, how did you come to determine your cost documents, any quotes from potential subs, vendor material estimates, wage and labor out documentation. These would be like the wage determinations if applicable for that contract. Technical narratives, past performance narratives, any key resumes, all of that should be rolled together under that proposal working papers. And your teaming documentation, again, if applicable, teaming agreements, any sort of master subcontracting, any JV documents, or any sort of mentor protege documentation. It's good to have copies of that all tied to that contract file. For award and performance from the agency, original assigned contract and all modifications, if any, documents support contract modifications, documents that support any contract modifications, justification approvals, determination findings, notice of award, notice to unsuccessful quoters or offers. Again, this is kind of for that agency audit standpoint, bid performance payment or other bond documents, or reference thereto for notices of surety, report of past award conference, notice to proceed, stop orders, any overtime. So this is just, through the performance, purchase system information, if applicable, consent to subcontractor purchase, again, if applicable, royalty, invention, copyright records, and then orders issued under the contract. All right, so agency side. From the contractor side, we, again, signed contract and modifications. It's really amazing how many folks I've talked to where they don't actually have a copy of their signed contract. They just kind of started performing. Post-award cost certification, again, if applicable, that truth certified cost of pricing data in the TINA, Truth in Negotiation Act, the Truthful Cost of Pricing Data Act, etc. I said Truth in Negotiations Act, which is TINA. I might have given you guys the wrong. Sorry about that. Here it is here, Truth in Negotiation Acts. Bid performance, payment or other bond documents, reference thereto, insurance documentation where applicable, all required submittal documents, you should have a copy in the file, proof of filed required reports, subaward information, as well teaming, subcontractor insurance. Then we went from teaming agreements, pre-award to actual award, so those should turn in from agreements to contracts. And then certifying that those subs that we have are actual businesses. Maybe you have the subs insurance, or you should have, not maybe, but should have your subs insurance certificates, business license, and surety bonds if applicable. Award and performance kind of continued. And from a contractor, daily performance data, field notebooks, timelines, progress notes, requests from the CO, the contracting office and or contracting officer rep for potential contract changes, any project manager communications with your contracting officer's rep, progress status reports from subs, you want to make sure you have those as well. Any timesheets, there could be a potential labor dispute. So it's important to keep all of those timesheets. Any sort of written communication from the agency, certified payroll where applicable, invoices, contractor invoices, requests for equitable adjustments, and include all supporting documentation. So again, just continued list from contractor performance. Now the agency is going to have the same sort of documentation, but what they're going to be looking at is documentation supporting advance or progress payments, progress, expediting production surveillance reports depending on the type of contract, quality assurance, property administration records, uh, documentation regarding any termination actions, any additional documents on which action was taken that reflects actions by the contracting office pertinent to the contract. So while we have all of our communications notebooks field, what happened as we noted for the completion of the contract, obviously the contracting officer should have that as well. And this is really critical from the agency side. And while I'm talking about what the agency is doing, and if you're thinking, well, why do we care? When you have that changeover in contracting office or an entire acquisition team has been removed and that work and current contracts are moved to an entire different contracting office, as we're seeing in today's activity, then having those complete records is going to make your performance in contract easier when you have that change in contracting officer. So make sure having that communication and making sure that your contracting officer and those contracting officers reps have that communication and written notice. All right, again, from the agency, any bills, invoices, vouchers, supporting documents. So that's just getting everything pulled together, doing the audit, making sure our files are complete. It is a lot. And hopefully that there is that good contract, administrative contract process in place where you're gathering that as you go, and it's just not kind of this pile or that pile to be sorted at a later date. So now that we have audited our files, we've taken a look at, we've got everything together, let's talk about the contract closeout procedures. So basic closeout principles, concepts, and rules. So closeouts take time and can vary by the agency and by the contract type. No two contracts are the same. That's kind of a given. That reading is fundamental principle. It is important to review your contract file, look for any missed activities. Did you have language that impacted where your communication was talking about a change in contract? Did that change ever become a formalized, or was it just kind of rolled in and done? Did by chance you miss actually getting the additional funds approved for those changes, or were they just kind of happened because it was a fast moving contract? So reviewing that reading is fundamental principle is really important, both for the agency side, but also for the contractor to decide, for somebody looking at everything before they finalize, to make sure that really your contract was paid in full and all of the compliance requirements really were complete. So as I have here in italics, failure to perform this function may result in missing many important items and the loss of substantial amounts of money. So making sure that if there is, especially if you are still disputing additional funds, that request for equitable adjustment, and maybe by reading that file, you're going to find that critical piece of information that was missing from the beginning of that conversation. Inventory principle. It's imperative in reading and examining the contract file that the practitioner make a complete inventory of actions needing attention under the contract. Again, if that becomes part of the administrative contract from the beginning of the contract, and then closeout becomes that much cleaner for you as you've incorporated these concepts from start to finish your contract. Inventory principle, this should identify the source of action required as well as date for completion. A follow-up principle, once a contract has been physically completed, it is seen by many as having fulfilled its need. Consequently, some individuals will be contacted, will not put your request action on their priority list, with the possibility exception of cost plus fixed fee contractors. Okay, this is really kind of this from an agency perspective that I pulled from management concepts class, is from an agency where they're having to reach out to a payment office or reach out to their COR for any, whether they're looking at past performance or clarification on what was taken, the actions taken during the contract, and they're busy with their current contracts and they're not really interested in that, dealing with stuff that's done and complete in their mind. So it's just something to keep in mind, that you may have delays if you do need to reach out to individuals, or in the case for us as contractors, those individuals are no longer with the agency, and we're reliant upon somebody going through and reviewing contract records. So again, keep in mind. But the reason I kind of bring that up and I'm kind of pausing so I'm not just repeating myself, but again, it's that, soapbox moment, make sure that the importance of those communication texts and emails, that you have that you can then supply should you have a staff turnover on the agency side and their records might not have had a chance to be updated or as complete due to circumstance. If you can provide that additional information, not necessarily saying that responsibility should fall on you as the contractor, but we are kind of in an unprecedented area with that changeover in staff. So keeping that in mind, the criticality of these last communications and last directions as we are kind of shuffling all of the decision makers in place are going to be incredibly important to make sure that your contract is able to be completed in full, that you're giving credit for that, and that you're paid for that in full. And by giving credit, I'm saying for past performance. All right, let me keep moving forward. I need to start picking up and moving along or we're going to run out of time. So let's just highlight a few areas of concern when closing out the contract. One is additional funding. So if there were any changes, requests for equitable adjustment, and the contracting officer has approved them as valid, and yes, the contractor is due, you all as contractors are due those additional funds, the agency has to go back and make sure that they have that additional funding. If we're coming back after a contract is closed and we're saying, hey, we did this additional work that was never billed and we're trying to make whole now, and the agency agrees, why, yes, you did, they still have to go back through and find the funds from that particular fiscal year. That's why the further away from completion, the further down the road, while many fiscal years have passed, the agency still has to go back from that original pot of funds and find that availability in funding. So please make sure for a contractor, the importance of being prompt with your invoicing and those requests for additional funds where applicable, that you are not coming back after the fact years down the road where they're going to have to go back to the books and find those additional funds. The older that request is for that particular fiscal year funds, the farther up the hierarchy they need to go to be able to have those funds made available to pay for you. Release of claims to protect the government is imperative, especially for cost reimbursement, time and material, construction, A&E contracts, that the contractor sign a document stating that it has no additional claims against the government under the contract, foresees no such claims against the government, and releases the government from any such claims or liabilities that may arise. So these release of claims are important enough that they are considered areas of special concern for an agency when processing contract closeout, which means for us as contractors, this should be something that we are applying this practice to our closeout procedure, especially if we do have subcontractors, vendors, making sure that same thing, especially in the construction realm, that there is no anticipation of claims arising from this contract activity after the fact. So such documentation is desirable in other contracts as well, although the FAR doesn't really require it. So the FAR calls it out specifically under that list I read to you above, cost reimbursement, time, material, A&E, where those are mandatory, but it's not a bad practice for that to be applicable and see if it's makes sense for other contracts outside that arena as well. And here we just have an excerpt for release of claims that is something that can be written up and signed and agreed. So I am going to just let you read that. I'm going to move on. Sorry if that was too short. All right, areas of special concern continued, disposition of classified information, government provided identification, especially again tied back to your security clearances and base access or facility access. Contractors must return such identification to the issuing agency when no longer needed for performance upon completion of the contractor's employee's employment, upon completion contract completion or termination. So it is critical for you all to make sure as part of your process that if you do have issued government IDs, security clearances, that you are tracking those, because those are documents that are required to be returned. Invoices, area of special concern continued. The invoice provided by the contractor must be marked, stamped, or otherwise indicated to be the final invoice. Well, if you're billing through wide area workflow, there's that handy box that you're checking as final invoice. IPP, you can note if it's in a final invoice. If you're doing through other payment processing, internet payment processing platforms, then there's usually a nice handy checkbox so you can easily identify when an invoice is final. A copy of the paid invoice should be included in the contract closeout file. If that is not available, a certification that the final invoice was indeed paid with all the details of the payment. The audit and/or cost analysis of any final invoice constitutes the review and acceptance of the invoice. Any differences will have to be resolved and the contract modified to account for the cost differential. Okay, so final invoice. Liquidated damages. Again, this is from this agency perspective. The agency is required to ensure that any liquidated damages, if assessed against the contractor for the failure to deliver, perform, or to make a good faith effort, but the agency is required to make sure all liquidated damages are accounted for if applicable. When the contract contains a liquidated damage clause, the closeout specialist must ensure that the liquidated damages have been collected or otherwise not assessed. The final technical report. If a final tech report is required, it must be completed, submitted, and accepted. When submitted under the data item requirement requiring government approval, contract completion is contingent upon this approval. So again, if you are providing information and your services are in the form of a final report, you have to get that final report, no more modifications, questions, and accepted as final. Patents and inventions, plant and property clearance reports, price revisions completed, release of contract funds. So I'm not going to go into detail here on these two for time, but let's talk about price revision. Any revised prices will normally be reflected in a contract modification or by receipt of revised invoice of contractor. If there's dispute, the contract cannot be closed out until it is resolved. Now, this is again written out from an agency perspective of, hey, these are areas that we need to make sure don't exist before you close out the contract. But internally, for any price revision, if you've submitted a final invoice, did it include? So we're going to kind of keep bringing this up over and over. You want to make sure that you are paid in full. Release of contract funds. So this is if there's any deobligation to return excess funds to the proper accounting or finance office. So if you get a letter from an agency that says they've acknowledged your final invoice, there's excess funds on the account, and they're looking for you to sign off, or they're just to let you be aware, depending on the contract type, that they are deobligating any excess funds. So those funds can then be used elsewhere within that fiscal year. Royalty payments, I'm not going to go into that too much. The information's there along with the FAR clause if that's something applicable for your contract. Subcontracts have been all settled by the contractor. There must be evidence that all subcontracts have been settled between any prime subcontractors prior to closeout at the prime contract government level. The same subjects that are addressed between government and prime contractors should be addressed between prime and subcontractors. So then again, if this language is being highlighted for that agency review, it's good to apply that into your contract administrator on your, your business level, part of those developing those standard operating procedures, that you're making sure that there are no disputes between you and any subcontractors so that this can be moved forward. Again, here for us at Alaska Apex, really do get a lot of phone calls on, oh, I never invoiced and it's been a year or two and now I want, or I'm having a hard time getting that final payment for the prime, maybe because they were slow to invoice as well. So there is that responsibility, just like the federal agency is required to make sure that the contractor is paid in full. You as a prime contractor are required to make sure that even if your subs are not being timely on submitting those invoices, you have that legal requirement to make sure that they're paid when you're paid, or in that 7 days, depending on the type of contract. But even if the sub isn't being timely, there is that responsibility of making sure, kind of ride your subs, get those final invoices so that you in good contract administration can say, yep, all subs have been paid in full, any claim, any lien releases were applicable, so that you can move through with confidence for closing out your contract. Any subcontracting plan or subcontracting provisions, if you had changes in your process, again, there's dollar thresholds where that applies. It's good to just kind of monitor that for past performance information for you for future use for various subs that maybe you might not want to work with. Again, while we talk about the federal agency having turnover of staff, we as contractors have staff turnover at times as well, and making sure that if there was a particular sub that a project manager had difficulties with, that is notated so that future project managers have that information to make a determination if they're going to continue that relationship with that subcontractor or not. All right, I'm going to pause for just a second. Does anybody have any questions? I know, and I apologize. I can see everybody's attention is moving from the screen off to elsewhere. GoToWebinar gives us that little heads up. This is a wordy, a lot of information, but great information to be able to refer back to. Last page on areas of special concern, we have value engineering changes and warranties. Now, just for the purposes of time, I'm not really going to go into this now, but I do want to just call out that these are highlighted in if applicable for your contract. Here is again processes for making sure that you can close that out if needed. Now, duplicate payments. So this one is really very critical. In fact, you in your SAM profile, under that responsibility matters clauses, there is a page under proceedings that you've checked a box that says, have you had submitted a proposal or contract with that FAR 52209-7? And it's right there in the reps and as part of your SAM where you've said yes or no. So what that is implying is that you are certifying that you understand the criticality of reporting duplicate payments. So I really do want to take a moment to kind of highlight this, that there are, one, that you've signed your SAM registration, and two, part of the acceptance in that signature of an executed contract, that you have an obligation to report any duplicate payments, even if it's just a minimal amount, 5 cents or under $100, something that we think of, when looking at the overall dollar amount, that is a minimal amount. Do have a legal obligation to notify the agency of that duplicated payment. Now, the agency might decide that that is a minimal enough cost that they're going to just let you keep that. Congratulations, you made a little extra profit from that particular contract. But having the proof of that communication, so again, you pick up the phone, you call and say, hey, we noticed this, following that conversation up in some sort of written format, and then adding that to that file. So from the agency perspective, it says all contract payments must be verified and reconciled with the payment information in the financial system before contract closeout. The step is necessary to ensure that all approved invoices have been paid and there not have been duplicate payments. If a duplicate payment is identified, it is considered a form of debt owed to the government per FAR 32.601. The contracting officer has primary responsibility for identifying and demanding payment of contract debts resulting from errors made by payment office. An agency, if you owe a government agency money for whatever reason, IRS taxes, liquidated damages, for example, duplicated funds, they can flag your SAM record that you have that financial obligation, and then any future contracts can be tagged to make the government whole. Now, I'm oversimplifying that process, but I just kind of want to give you a heads up that can happen. And we've seen those flags pop up on contractors that there is a debt to the government, and it's going to come out of your next payment from the next contract. So the importance of making sure that you are really auditing your payments to make sure you don't have duplicated. Now, I know if you have multiple payments deposited by EFT, that electronic funds transfer, you really got to carefully go through and make sure that you are sorting that out. It is challenging in the fact that you just kind of get one EFT string, and individual payments from agency A and agency B are not done separately. If all the money's coming from US Treasury, they're going to lump sum that. So if you do, if your business does receive quite a bit of payment by electronic funds transfer, it is very important that you are taking the time to review those payments and you are splitting out each one of those costs if receiving payments for multiple things to make sure that there is not any sort of overpayment. All right, my little soapbox moment again, but again, I just want to let you know. So this is absolutely an area of special concern for contract closeout, and it does have a lasting review, possibility of harm for you as a contractor if this happened and was overlooked, even if it wasn't intended to be. Well, we know we overpaid, but they'll never find it. We're going to move forward. Even with no ill intent on your part to not have reported, if this is being closed out by a closeout team 5 years down the road and they find that overpayment, yeah, and you can start getting into triple damages too for overpayments as well. So not an area where you want to be. All right, problem contract closeout. This is kind of, again, from an agency perspective. A problem closure is a contract that it has unusual circumstance, barring the use of traditional closeout methods. The contractor is no longer in business. From your standpoint, maybe you have a subcontractor that's no longer in business and you haven't received a final invoice from them, or you're trying to pay their final invoice. They're in bankruptcy. There's bankruptcy procedures in place. Who do you issue that final payment to? The contractor is unable to submit supporting indirect cost data for final vouchers. Again, you can roll that through. Well, one, you aren't able to support additional cost, or your subs aren't able to support. A firm fixed price contractor fails to submit a final invoice. And I've talked to a lot of contracting officers, and it's astounding how common this is. They get busy, they move on to the next work. They're so focused on getting those contracts completed that they're not following up with that paperwork and making sure that they're paid. It says on occasion, but boy, we see that quite a bit. Contractors complete performance but fail to submit a final invoice. I actually had, before working with Alaska Apex, where I was working with the FAA, and I had a month-long project of going through and closing out old contracts. And these were just smaller contracts, but the whole point was me trying to get the contractor to submit final invoices so that those funds could be paid and additional funds deobligated from the contract. And it was amazing trying to get a hold of those contractors and how complex that was to reach out and to get the businesses that did the work to submit those invoices. So keep that in mind. Make sure that you're timely in your invoices, and if you have subs, make sure that you are pushing them to be timely as well. Cost reimbursement, contractor failed to submit the final voucher. And then here are some different processes from the agency perspective in that case. A problem closer is a contract that has unusual circumstances, barring the use of traditional closeout methods. So they have unreconcilable contracts. And this is one worth paying attention, not just from the agency, but from the contractor view as well. So there are instances where the government and contractor agree that the contract performance is complete and all items have been shipped and accepted, but the contractor has not received a final payment because the contract has been determined to be unreconcilable based on payment discrepancies. A contract is also considered to be unreconcilable when adequate documentation required to support contract disbursement is not available, or the normal reconciliation process would result in an unreasonable effort and expenditure. There are several factors that lead to issues involving reconciliation, including multiple payment offices during the life of the contract, contract mergers or reorganizations, loss to key players, and old contracts with many modifications. So here it's talking about the administrative contracting officer should review the obligated and unobligated balances, and really ultimately this for you as well as the contractor doing the same, both the agency and the contractor looking at that. And then the solution is, in these instances, a negotiated settlement may be the best solution. How are you going to resolve this so that you can move forward in your business? A negotiated solution will support an orderly and economical process for closing contracts with little financial risk to the government, ensure government is made whole at the total contract level. And the end result is closure and the best available data. Um, Something to keep in mind, there is a negotiated process when you guys are just determined this is unreconcilable. Contractor performance. So this is one that really absolutely is critical for you all. Past performance information, including ratings and supporting narratives regarding a contractor's action under previously awarded contracts and orders, is relevant for future source selection purposes. So here again, this training was really directed for contracting officers, and here is, saying, hey, past performance is important for the contractors. It's not just something that the agency should be looking at so they don't bring on bad contractors, but it's important to make sure that the contractors that you've had that success with and have had that good solid relationship is able to use this past performance for future proposals. So part of, from the agency perspective of completing this contract closeout and gathering past performance data, it says includes, for example, the contract record of conforming to contract requirements, standards of good workmanship, forecasting and controlling costs, adherence to contract schedules, including administration aspects of performance, reasonable and cooperative behavior and commitment to customer satisfaction, reporting into databases, and this can include SAM. Did you let your SAM expire and it took you a year to get it out and they couldn't do the next modification, or you had delays in payments because of an expired SAM? So little things too. Integrating integrity in business ethics and business like concern for the interests of the customer. And so FAR 42.1501 kind of talks about past performance and the things that the contracting officer should be paying attention to as part of this closeout process. Now, this one screen is really important for you all that are trying to gather past performance of if the FAR is saying these are the areas that contracting officers should be reporting on, these are areas that as you're trying to gather past performance data for whether for CPARs or just to get a single write-up that you can use for future solicitations if you're under that dollar threshold for CPARs. But these are areas that you can kind of propose and write up some of the narrative and kind of put that together for the contracting officer to adopt for completion purpose for their, whether CPARs or just to write up a past performance narrative for you. So these are the areas that are to be addressed: integrity, reporting, reasonable cooperative behavior, adherence to contract, forecasting. And on this next slide here is the CPARS grading scale. Now again, I'm kind of running short on time and still have a little bit of information to go over, so I'm just going to leave this for your information. Performance evaluations contain both government and contractor comments to provide a balanced view of performance, allowing source selection officials to look beyond contractor references. So quite simply, we do have a recording of a presentation done by Randy Miller, who is the SBA PCR Procurement Center representative. He's one of two here in the Alaska District, and he has a webinar that he does once a year or so for me on, maintaining your CPAR records. And so here is really the realm in which you are looking. So we're talking over these bulleted areas. How did the contractor do? And then here are the rating information. And as Randy has mentioned, this is your goal line. You want satisfactory. We don't need exceptional or very good. These are unique circumstances, but you're looking for that satisfactory. You've done it, everything. Maybe there's a problem, but it was addressed, it was handled well, because nothing happens without some little moments of, oh, now what? And everything, again, corrective actions were satisfactory. So this is our bar to where we want to see. This is where you want to see what contracting officers are taught to look for, that there was satisfactory performance with, here or there, some exceptional, very good, but again, they really talk about what you have to do to exceed to be eligible for the ratings. So again, here are the items to address. Here is the rating mechanism for CPARs. So even if, again, you're requesting past performance information in that contract, or as a subcontractor, you're asking the prime to provide some sort of past performance, this gives you a really nice outline in which you can kind of draft performance statistic and write up a narrative that they can accept or use to roll into their narrative to move forward, and that you can get that letter of performance. Record retention, again, I've got a couple slides talking about record retention, and I'm not going to spend a lot of time on this, but it's important to have this at your fingertip and understand your requirement for contract record retention. So FAR 4.805 prescribes time periods for the retention of documents, and it's based on contract type, dollar amounts, and depending on the type of information. So here, contracts and related records or documents, including successful proposals, etc., regarding contractor payroll submitted under construction contracts, we're looking at that retention period 6 years after final payment. I was going through, I had just completed a webinar on the Little Davis-Bacon that I did last week, and we're talking about, there's a 3-year timeline for payroll record retention pertaining to that. And I also was looking for, when we're talking about wage determinations, that how long do you have to keep payroll regarding for wage determination for contract completion. So this table here on this page really kind of gives you a good guideline, and this is from an agency perspective of maintaining records, but it's a good guideline for you as well of having those records accessible depending on what it is that you are looking at. So depending on the various type of document. Since agencies do not usually keep closed contract files physically in the agency for much longer than a year, but rather have it sent for offsite storage. So for you, whether you keep the physical hard copies or keep your data, have some sort of storage mechanism, keep in mind that at a minimum, you're looking at those 3 to 6 years, depending on what information and the type of contract. Okay, let me move forward here. Records retention by contractors. So although the primary focus, again, we kind of talked about this, is on government concerning the retention of records, FAR 4.7, if you're looking for a specific guideline to use specifically, places some responsibility on the contractor in relation to certain records if the contract contains one of the following clauses. So something, again, to look at for sealed bidding or negotiation. Most of our contract activity, any of the firm fixed price, a lot of that commercial, that's going to all, I'm sorry, not commercial, but any of the simplified acquisition, anything that falls under that firm fixed price, in essence, is going to be a negotiated contract unless it's sealed bidding or commercial practice. It's going to fall into that negotiation. So it does give you timelines for that. Contracts containing one of those clauses listed above requires contractors to retain contract records documents for 3 years after final payment as indicated table specific records. And this kind of ties in as well for the Department of Labor for certified payroll. So 3 years is a pretty good average of exception. There's some cases that you do have to have longer. So if you do sealed bidding or you have specialized cost reimbursement contracts, there might be a little longer, again, just because there's that delay in final payment. So here's that information. So bottom line, keep those records for 3 years after final payment. Here's more information on the different type of documents, information within the contract and the timelines for contractor held records. So you can see paid, canceled, voided checks up to 4 years, labor cost distribution cards, payroll sheets, 2 years, petty cash records, 2 years. It kind of just varies. Honestly, if you have the information related to your contract, you have that complete contract filed, included all of those supporting documentation. So if you have payroll stored in your payroll files, but also certified payroll specific to that contract stored together, and you are following that contract storage for that particular timeline for that 3 year, should be fairly well covered. Pay attention to where it says 4 years, but again, we have a couple of pages of slides where it's talking about 4 years is that longest. A lot of information. Where it becomes critical of not having that is if you're audited after the fact, or you are trying to perform any past performance, or again, you've discovered that you are trying to support a change order or an equitable adjustment or something after the fact that you are trying to be paid, and they're asking you to provide documentation to prove that those were genuinely the costs. This all ties back to how long you keep those records. All right, I know, exciting stuff, but it is really critical through that contract compliance. All right, so let's change and get away from FAR related, and let's just talk, this last little component is really about contractor specific and for developing good closeout and performance processes that are going to benefit us when we're working on our next proposal. So in a nutshell, from the contractor view, here's our closeout process. The contract physically complete. Our compliance with terms and other conditions is also done. We've done any maybe subcontractor reporting or bio reporting. Any of those reporting requirements are done. All legal matters are resolved if that was applicable. Our closeout documents have been initiated by the agency and internally. Closeout documents obtained, final settlement and payment, we are all good. That's rolling up through all tiers of our subcontract, and our files records have been consolidated and our contract is officially closed. So really all of that from a purely contract administrative process has been done, but now what? So from an accounting perspective, we have been, all direct costs invoices have been identified and received. And all change order files and excuse me guys, hiccups. All of those secondary accounts have been all consolidated and rolled up. So we have our main project, and then we might have a secondary project cost code for triggered by change orders. Contract modification costs have been identified. All of our supplier, vendors, subcontractors, employee labor costs, all of that has been pulled together in full. All financial disputes resolved, financial invoices submitted and paid for both the contractor to the agency, plus all sub-vendor suppliers have been paid in full. Lien releases, acceptance of final payments have been submitted and received if applicable. And again, if applicable, those indirect rates have been audited. Okay, that's from our accounting. We get to close the books on that particular contract activity. But now let's talk about that internal performance review. How did we do? And I've already talked about this a bit, but it is really incredible and so easy to bypass. Taking the time that we've completed a contract, because usually we've done the work, we're already on to our next project, and we're just rolling forward, keeping that cash flow going. But there needs to be a time where we stop and we look at those proposed costs versus our actual costs for self-performance and subcontractor performance. Where did you meet? And with a show of hands, how many of you guys do that within your company, that you make that effort to go back and look at your actuals versus your proposed? Because sometimes the reality is really surprising, where we're basing and we're pulling together our proposed, especially if we're rolling things out in our head based on past, but what we're not realizing is we're not as profitable as we thought we were, because some things might take longer. We might have delays from vendors, suppliers, or subcontractors that have a cost impact that we might not have really been, aware of in that front part of our brain, so to speak. We've just kind of keep moving forward as we've always done before, without realizing that the ship has been leaking all along and that we're losing our profits for costs that we've not really captured or flagged. Times have slipped, things along those lines. Okay, so one, we're looking at proposed versus actual costs. We're also looking at proposed timelines versus actual timeline to complete, because our memory is faulty and it's easy to say, yeah, that kind of went smoothly and yeah, that's about what I expected it to take. And then when we sit down and kind of look at what we thought when we did our planned project management timeline versus what really happened according to our actual calendar and looking at timesheets, how well did we sync? How was the safety performance in that contract? How was your employee performance on that contract? Your key personnel, they've done well. Are you capturing their performance, their individual performance as key personnel for that contract and doing brief write-ups so that you have that to propose for future proposals, again, where you have key personnel or subject matter experts that are critical for those technical to be selected over another company, those differentiators. Your staff is a critical differentiator. So are you capturing those highlighted moments during performance so you can have them for future? And that contractual performance through the tiers. How smoothly did that teamed relationship work? And what lessons did you learn? Whether it's from the agency, from a particular vendor, a particular individual, whether the contracting officer or COTAR or COR, what lessons did you learn that you can apply then towards future proposals? And this is just an example out of the blue, but if agency X has contracts, and most likely you're going to be working with a small set of contracting officers, knowing that there's a lot of delay in communication time, again, just because there's not enough contracting officers for that particular contracting location. So there's delays in communication and it impacts that. So maybe understanding that and applying that against future. Are those going to be the same contracting officers, same tech reps that you're going to be working with again? Can you incorporate that into your timelines when you're proposing? Okay, just a quick example. So archiving narratives. This is a labor of love, but it really is critical to have at your fingertip. And as my little cartoon says, you call it clutter, I call it free range paperwork. It's why, have a process. Well, so why reinvent the wheel for each new proposal? Instead, develop a proposal archiving system to capture technical proposal narratives, key personnel resumes, past performance packages, having that. And so, yeah, you're filing that same information, in different areas, but instead of having to go back to past contract files every time, that you have narratives so that if you're doing similar projects, you have those past narratives rolled up in one file electronic folder where you can go back and pull. How did we write that up before? How did we use that? How was our success rate? What went well? Because with each award, as well as each non-award, you have that opportunity to request a debriefing from the contracting officer. And you want to know, how was your technical proposal when compared with others? Was it sufficient? Was it lacking information? And you want to take that feedback and highlight those proposed narratives and have that available for use. So again, just like looking at auditing your proposed costs, you're not missing opportunities consistently. We are creatures of habit. We tend to kind of, fall back into that, well, that's how I done it before. So I'll keep doing that moving forward. So, yep, develop a proposal archiving system. Compare proposed to actual performed, proposed versus actual performed out, and adjust the narrative for future use. If the proposal wasn't awarded, request a debrief. We kind of talked about that. Again, compare feedback against the narratives and adjust, add comments, improve for future use. Track the narratives that worked well, had positive feedback, and mirrored actual performance. Have a way of highlighting and being able to pull that up again. Develop a keyword system for tagging portions of your narrative in order to find for future use. So, relationship maintenance, and hang in there, guys. We've got about 7 minutes left, and I've only got a couple slides left as well. So let's talk about relationship management. maintenance, and management. How did your project relationship end? So we've completed the contract, we've done the scope, it's physically complete, but how did our personalities do during said performance? So one, we want to know, just for purposes of performance evaluation from owner, prime, subs, etc., we kind of want to do that 360 progress. How do they call that for performance, employee performance appraisals, that 360, how did we do? From your teaming partners and performance evaluations, what relationships worked well? What were some of our hiccups and miscommunication moments? What language can we use? What process can we use? Did we find out a certain contracting officer likes to get a phone call saying, hey, I sent an email with this, or follow up each phone call with an email? What communication practices worked best with whom? Discussions of future projects. How will you continue with this relationship? If you've had a successful contract completion, maybe reaching out to that small business professional for that agency and furthering that business relationship. Hey, we just completed our first contract with you and it went well. We've hit satisfactory. We did as proposed. We want to continue that business relationship. How can we extend that business relationship? The same goes well. That same mentality and activity works from subcontractors to your primes as well. Reaching out to the primes after the fact and say, hey, we really enjoyed working with you. We really felt that we had a great working relationship, solid communication. We would like to, have further opportunities, work with you on future projects. Look at a satisfaction survey a year after completion. How is it after the fact? And it's kind of a way of going back and saying, hey, remember us? We did this contract or subcontract for you. We want to make sure that we're doing those future relationships. Again, relationship maintenance. Status check with lenders, financial institutions, your surety, insurance providers, supplier, vendors. And this is about avoiding bottlenecks for growth. So if you've successfully completed your work in progress for your construction contracts, then reach out to your surety, that insurance underwriter, and say, hey, we've had successful contract completion. We were on time, on budget. We had a few hiccups, but we handled it well. Here's our thing. What can we do to increase our bonding capacity? What can we do to increase those credit lines based in? So reaching out to that, same thing, supplier vendors. We've had a successful relationship. Can we talk about having charge accounts or further discounts for future? Follow up with those, not just from that contractual hierarchy for agency prime sub, but again, with those support providers for that contract performance and for your business operations. Phew, guys, that was a lot of information. And thank you for hanging in through it all. Do we have any questions? There's a lot of information. Again, feel free to download those slides. If you aren't able to grab them from the GoToWebinar panel, you can always respond to the webinar invitation and ask, and I'm happy to get those handouts to you. But as you are thinking about this and you're applying all of these practices for that contract closeout, if you have questions, feel free to reach out to us. And again, just a quick reminder of who we are, the Alaska Apex Accelerator. We provide that free assistance with all aspects of government contracting. And we're one of 96 other Apex accelerators across the US, Puerto Rico, and Guam. And just to kind of call out, here is our website. If you're looking for the recording of this or other webinars, check out our training and on demand. But also, if you have offices outside of the Alaska area, or you're looking at diversifying, moving into a different geographic region, check out the Apex Accelerator in that location. And you can do that through these two websites, the National Association for Apex, the apex.us, and right on the landing page, it has a map where you can put in the state or a zip code and find the nearest Apex Accelerator, or here is the Department of Defense Office of Small Business Programs website. You can find out more about the program on a national level, or again, look for those other Apex accelerators. Because while we all focus on the federal contracting aspect, each one of us are kind of experts of what's going on for that state and local. You know, we know what's going on in our own backyard. So absolutely keep in touch with us. But again, if you're diversifying that geographic area, check out other Apex, see what they have going on, that you have opportunities to meet with local contracting offices for both that state and local as well as federal. And last but not least, if you're wondering how to get a hold of our office, here is our contact information for all of our staff in the Anchorage and Fairbanks office. So again, if you are thinking about any of this after the fact or are starting your contract closeout process internally or looking at revising your procedures, if you have any questions, feel free to let us know. Happy to reach out, happy to talk to you about it. If you have any questions or just need that sounding board, let us know how we can help you. So everyone, you've been pretty quiet. I'm going to do a last call for questions. Okay, well, at this point in time then, we will go ahead and officially close out today's webinar.